Alright, so the third topic today, this is one of my favorite topic to teach because um, I like it because when you learn the proper ways of identifying time and coordinating them, knowing their relationship, that makes trading so easy, so easy. So it's one of my favorite topic to teach. So time frame coordination. Why are we learning this? Because in the market, in the charts, we are only dealing with time and price. Time and price. So if you don't know the time to buy, the time to sell, it's gonna be hard. So time frame coordination. So time frame coordination is just the proper ways or proper use of time frame for analysis and trading. So when you are doing analysis in the market, you use time frames, and when you are trading, the time you're putting your positions and the buys and sales orders, you are coordinating time. So it's just an art of making different chart time frames work together as a team. All right, so it's just a teamwork of time frames.
Okay.
So um, the time frames are set to a point that higher time frames gives us destination or direction of the market, and the lower time frames shows us the safe road for us to place orders or placing our positions. So don't anyone tell you that we use lower time frame to find our direction. If you find somebody telling you that okay, the directional bias is talking about the directional bias in the 15 minutes or 30 minutes, or rather 5 minutes, that one is, I mean, the one doing that doesn't know the proper ways of time frame coordination. So we only use higher time frame, and when I'm talking about higher time frame here, I'm talking about 1 hour to above, and sometimes we use only daily time frame as our buyer's time frame, right?
Okay.
So yes, so higher time frame starts from the 1 hour, and sometimes 1 hour doesn't act as the higher time frame. And I'm going to show you. I'm going to show you how. I mean, why I'm talking. I'm saying this. So we have three coordinations of time. Three
Okay.
coordination of time. Actually, we have two, but I added three because of this program. Okay, this program, the Gold 4H formula. So the first one, and this is the general coordination. The second one is the simplified coordination, and of course we
Okay.
have our lovely formula, the Gold 4H formula. Now, talking about
Okay.
the general coordination, okay, talking about the general coordination. Um, so this is the most popular time frame coordination. I mean, almost 75 of the world traders use this. 75% of the world traders use this time frame coordination to trade in any asset, whether it's gold, whether it's currency pairs, indices, and so on and so on. So in this coordination, the general coordination, we have series, and we have two series of time frame, which is the monthly series and the weekly series. The monthly and the weekly series are like this. So if you are using a monthly series, meaning you'll use monthly as your constant time frame, and then from monthly you go to daily as your situation 1 time frame, and from daily you'll go to 1 hour as your entry or as your situation 2, and I'm going to explain it why I call it situation 2 or sometimes entry.
Okay.
And of course we have 15 minutes. If you use the 1 hour as your situation 2, that means you will use 15 minutes as your entry time frame. And of course if you are using the weekly time frame, weekly stays as the constant time frame, then from there you go to 4 hour as your situation 1, and from there you go to 30 minutes as your situation 2 or entry time frame, and from there you go to 5 minutes as your entry time frame. So this is the coordination. But in this series, both series can be also we can also use this time frame to both series. Why? You may have a situation or an area where you want to put a position, whether it's a buy or a sell, but that area provide a lot of pips to risk. So the stop loss there, maybe it's too high or it's too low, making it so risk to trade. So in order to reduce the risk, we use these time frames, and these time frames we call them universal time frames. Why universal? Because we can use both. We can use them in both series of time frame. So you cannot mix. You cannot mix 4 hour to 1 hour, or you cannot mix 30 minutes to 15 minutes. No, this series stays at as I put them here. So, but this universal time frame, you can use them to trade in both series. Now I'm gonna explain a little bit, and in this general coordination. We said we have monthly to daily, and we have 1 hour, and we have 15 minutes. Okay, and we have a weekly. Okay, so we have weekly to 4 hour, and we have 30 minutes to 5 minutes. Now this is the first series and the second series. Now I'm going to explain a little bit why we use these time frames as both situation 2 or sometimes an entry. The answer is you can answer this question by defining what type of trader are you. So we know that we have 3 types of traders. Okay, we have the day trader, or sometimes let's start with swing traders. Swing traders. Okay, and we have intraday, or sometimes we call them day traders. Okay, and of course we have scalpers. So how can we define this types of traders. And remember, when we were talking about in the first topic, we talked a little bit about this, and I told you that I'm going to show you the way to define these types of traders using time frame coordination. So this is it now. So this is it. When you say a swing trader, that means this trader is using this series, the monthly as the constant time frame, or sometimes a week as the constant time. So this swing trader is using this as what? The time frame coordination. So it doesn't change. So if you are the swing trader, meaning you will start your analysis from the monthly or weekly. Are you getting it?
Yeah.
So, but when you say I am a day trader, that means your analysis starts from the daily or the 4 hour. So that means the coordination of time here will be daily as the constant time frame, then 1 hour as what? Situation 1, and 15 minutes as situation 2 or entry, and 5 minutes. So we always have 4 coordinated time frame. Alright?
Okay. Yeah.
Same applies in the 4 hour. If you're using a series in the 4 hour, that means 4 hour will be the constant time frame, then 30 minutes as your situation 1, then 5 minutes as your situation 2, and in order to complete the 4 time frames coordination, meaning we will add that universal time frame, which is 3 minutes. So this is the coordination for a day trader.
Yeah.
But if you are a scalper, what if you are a scalper now? A scalper will start the analysis from the 1 hour. So here now, that's why I say the higher time frame, we can start counting this as the higher time frame from the 1 hour. So this is why.
Okay.
Because a scalper can use 1 hour as the constant time frame. Okay? Or you start your analysis on the 30 minutes. So that means the coordination on the 1 hour will start on the 1 hour, then to 15 minutes as your situation 1, then to 5 minutes as your situation 2 or entry, or sometimes we go to 3 minutes as your entry. Same applies if you're using the 30 minutes, that means you'll start your analysis in the 30 minutes, then you go to 5 minutes, then you go to 3 minutes and 1 minute to complete the 4 hour time, the 4 time frames. So this is what? This is the roadmap for both traders. If you are a swinger, that means you will use this coordination to trade. But if you are a day trader, that means you will start with daily or the 4 hour. You will choose either of this series. Same applies for a scalper. So this is how you define the type of trader. Okay, this is how you define the type of trader. So this is the general time frame coordination. Are you getting it?
Okay. Yes, exactly. I understand.
Good. So now, from the general coordination, we have also a simplified coordination of time frame.
What is that?
Which is this one. This is the simplified coordination of time frame. In this simplified coordination of time frame, we have two groups of time frames. We have the group of the higher time frame, and we have a group of the lower time frame. And this simplified coordination is normally used. I use this simplified coordination to trade currency pairs. So whenever you see me posting entries on a currency pair, maybe it is the Euro USD or USD JPY or whatever, let you know that I have used simplified coordination, which is this one.
Okay.
The monthly and the weekly are the higher time frame, and here, what am I looking here? I'm looking for the direction of the buyers and levels where the market can come and react. And when I say I'm talking about levels, remember in the session where I talked about candlestick anatomy, there is a statement I said every opening and closing of a candlestick is what? Is a zone. Remember that.
Okay.
So when I'm talking about levels here, I mean those zones of the opening and the closing price.
Closing.
And the daily is acting as the portal. Why? Because here now is where I look for the confirmation of the higher time frame direction or levels. So whenever the price reached the level, I go to the daily to confirm that level or to confirm that direction.
Okay.
And entries, I use either of these time frames. I can use the 4 hour as my time frame or the 1 hour as my time frame. So you see, in the simplified coordination, we don't use 30 minutes or 15 minutes. Those lower time frames, we don't use them. That's why it's called a simplified. So this is how the simplified coordination looks like. Okay?
Okay.
Yeah, I can give you a little bit of an example. On my Euro USD JPY entry, I think I got some entries on USD JPY. It was somewhere here. I used this level here, and when you go to the 4 hour, you see it clearly. There is a level here. Yes, here. This was the level which I used to take this entry. It was last week. Took this entry here. It was fantastic. So yeah, we only use that as I use this simplified coordination to trade currencies. Don't use this simplified coordination to trade gold, because gold has a high pip value. So if you have a structure in a 1 hour, it can be 100 pips, and you cannot risk 100 pips in the stop loss. So don't use this in there. You use this coordination to trade those pairs that have low pip value. Okay. All right. So after learning about simplified coordination and the general coordination, let's take a look the coordination of our strategy now. It is very, very simple. Very simple. The coordination is starting to the 4 hour as our constant time frame, and simply that's why we call it the 4-hour formula. We start the 4-hour to look at the bias, the direction of the next candle using the candlestick anatomy theory. Okay, so if you keep on learning on the candlestick anatomy theory, because that is the key to our formula. And from there now we go to the 15 minutes for the confirmation. Now it's a little bit different because here 4-hour is coordinated by the 15 minutes, while in the general coordination we see the 4-hour is coordinated with what? The 30 minutes. So this is different because I've seen more of the confirmation during my research. The confirmations are very much applicable in the 15 minutes rather than the 30 minutes. That's why we use the 15 minutes. Okay? So 15 minutes is our confirmation time frame. And then from there now you can choose either of these. You can choose. I'm saying you can choose either of these. Depends on the structure you see. So you can choose 3 minutes as your entry, or 1 minute. I prefer going to 1 minute. If I see 1 minute doesn't have that what I need, then I use 3 minutes. So these are the entry time frame, and this is the confirmation, and this is our bias. So the steps are simple. The steps are simple. The step 1, we go to the 4-hour candle, not structure. 4-hour candle and not structure. So we use there to see the candlestick anatomy, whether the candle has breaked by body in the previous candle, or whether it was the week-to-week breakout. That will tell us the next candle's direction. All right? Yes, that is what is going to tell us the next candle's direction, so that we can trade that next candle. All right? So it simply reveals the intention of the next candle, whether it's a trend, that's direction, whether it's the momentum, that's the volume, the manipulation, whether it is the change of direction, whether it's a shift, and also the position sizing, whether we can risk 50 pips or 100 pips. It depends. Okay, so the 4-hour will tell you all: the direction, the momentum, the manipulation, and the position sizing. So the 4-hour previous candle history, that is what we are looking at. This 4-hour, what did it do to the previous candle? Did it break by body, or did it break by a wick? Then from there you will be able to identify the next direction, whether it's the reversal, or the breakout, or the continuation. Then step 2 now is going to the confirmation time frame, where now you are going to the 15 minutes. The 15 minutes, you look for the confirmation of the direction you see in the 4-hour. If the 4-hour tells you that, okay, the next candle is going to be a bullish candle. So if that is the direction, that means the 15 minutes should confirm the direction that is the bullish movement. If it doesn't, that means you are not going to trade that candle. You are not going to trade that candle. It's simple like that. And step 3 is going to the entry to look for the price where you can put your positions, and we use these time frames. And in these time frames we also have a small confirmation where we must have to see the 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 chart, the price performing change of character, or sometimes a break of structure, or both change of character and break of structure. So these are the main steps of our what our coordination in this formula. It is simple
Okay.
like that. It is simple like that. Now I am going to show you how this time frame work together. Okay, I'm going to show you how these
Okay.
time frames work together. Let me go to the gold, and this is the 4-hour time frame as usual, and this is how it is. This is how it is. For example, if we take a look today from the Asian session, today this was the first candle today, the 4-hour. In the 4-hour, since this was the first candle, that means it is difficult to analyze the next direction, but you have to wait that for this candle to close in order to define the direction. Now from this candle here, we see first this candle performed week to week breakout in the previous candle. We cannot count this candle because this candle was inside this candle, which this candle didn't do anything in this candle, did not close above or below, it didn't perform anything. See, so we can't count this. We count this candle that has performed something. So this candle here failed to block to break the high of the candle, so it performed what? A week to week breakout. What does the week to week breakout means? It means the next what? The next candle will perform a reversal or a retracement. Simple like that. So that means when the next candle opens, you mark the opening price of that candle, and then you go to the 15 minutes to confirm that okay, we are about to do a reversal. And the target, the 4-hour has already told us the target was supposed to be here. That's why you see this candle performed also a week to week breakout, but the next candle continued with the direction. Why? Because the take profit or the direction of the after this candle performed this week to week, the first take profit was supposed to be in this point. And this information I have provided it in the candlestick anatomy, so you go there and continue learning candlestick anatomy. So in the 15 minutes after the candle opens, the 15 minutes have to confirm the direction. And how to see the confirmation? You can use the week to week breakout of the candles. So here was the opening. Sometimes the confirmation can come during the 4-hour or before the opening of the 4-hour. So in this scenario here, we had this week to week breakout before this candle here failed to close here, failed to close here, failed to close here. So this was all rejections. And the next confirmation was the break of structure here. See, both of these were what? The confirmation. So from there now you go to the 1 minute or the 3 minutes, whatever, to see where you're going to place your entries. So in this case now, you can see here that was our opening price, and then price performed the break of structure, and then it left us with this level, which we are going to talk about these types of entries. We're going to talk about this type of entries. That was the entry there, the zone flip entry, and also we had the rounded entry module, which did not come exactly to the point, to the formation, but still it was in the level of the zone flip. So those were the entries during the Asian session. So during the Asian session you could trade these entries, and it was very perfect, very, very perfect. Now since our direction was supposed to hit this low of the candle, you can see the next candle also here. The next candle also, we mark out the opening, and we go to the 15 minutes to look for what? To look for the confirmation. And the confirmation was simple and clear. The candle here performed a week-to-week breakout, making us believe that okay, we are going to continue with the direction to reverse. Perfect. After the candle closure here, we go to the time frame that we have to look for the entries. So we had two entries here. The first one I took this morning was in the 3 minutes. The 3 minutes. I used the 3 minutes to take this entry here. After this break, that candle closure in the 15 minutes, we had this break of structure and the formation inside. So I took this as my entry. The stop loss I put in this candle here, and it hit the TP, and the TP was how many pips? 54 pips. So you can see how accurate and simple this is. You go to the 4 hour, look for the direction, look for the price where you're going to position your lot size and your pips sizing, and then you go to the 15 minutes to confirm that direction. You got 1 minute, 3 minutes or 5 minutes for the entry. Simple as that. I took this entry here. I don't know if it's going to hit my take profit, but I took this entry because if you go to the 1 minute, there's still liquidities left. There's still liquidities left here, so that's why I took that entry there. And if you go to the 3 minutes, you see clearly those levels. So we're going to learn about these entries, don't worry. We're going to learn about these entries. So this is how we do time frame coordination in this program. Okay, in case you have any question right now. Any question? Hello?
No, not yet. I need to rewatch it. Okay.
Okay.
So far, no problem.
Okay. So that is it for the today's lesson. what I want you to do in this lesson is just going through to this time frame. Now what I want you to do is just go to the gold chart and remove all the lines that you have.
Okay.
Whether you have diagram, just have one line like this, okay? And then you will go through the 4-hour time frame, the 4-hour candles, mark out the opening price of that candle, all right? And then you go through the 15 minutes, you see how the confirmation
Okay.
goes, and then you go to the 1 minute or 3 minutes or 5 minutes to see how the entries were taken. So this is not an assignment. I'm not going to give you an assignment in this topic. That's the only thing I just want you to do and go to practice on your own is this. Go on to the 4-hour, mark up the opening, then go to the 15 minutes, see how the confirmation went, and then go to the 1 minute or 3 minutes or 5 minutes to see the entries were how were they taken. I think you get the point, okay?